Right, and you can see it developing every day in real time as the market cap of Bitcoin now pushing $1 trillion. Remember, we first started recommending Bitcoin to our audience when the market cap was under $2 million, when it was less than $1.
It was like under $10 million sort of thing. It was
back
tiny.
in 2011. And now the market cap's pushing $1 trillion. It's already, I think, the 5th or 6th biggest currency. I believe it recently overtook the Swiss franc in terms of market cap and size in the global market. It's getting close now, about 50% or so, overtaking silver. So the global silver market's approximately just under $2 trillion. So certainly within a few months, Bitcoin will be vaulting over silver. It's on its way, in my belief, in 2021 to get halfway or so against the market capitalization of gold. That is, it would be $4 trillion, on its way to $10 trillion. And then, once it gets past gold, there's only the dollar is left. And the thing about Bitcoin is that it is the apex predator. It is the shark in an ocean full of goldfish or plankton, and which is the US dollar. They print a lot of dollars, but they're not particularly robust. And they are going to be decimated as Bitcoin dominates and becomes the global world reserve currency, as we predicted. So Morgan Stanley now is finally waking up to this.
Right. I might add that Stacy Herbert here, I was on Stansberry Research's podcast, their video podcast by Daniela Camboni. And I said that Bitcoin was the fastest horse in the race, and that gold was the best looking horse at the glue factory. It was heading to the glue factory.
I saw that, and all these gold bugs were triggered.
And I was going to say Frank Geistra, who is a multi-billionaire Canadian gold bug, did go on to Twitter to slander me and call me, say that was the dumbest thing he ever heard. But here, again, maybe he might take it better coming from Morgan Stanley. Morgan Stanley's head of emerging markets and chief global strategist, Raishar Sharma, published a report entitled Why Crypto is Coming Out of the Shadows on the Morgan Stanley website last week. Quote, despite the jitters natural in a global pandemic, cryptocurrencies are rapidly gaining popular support as alternatives to gold, i.e. a store of value, he said, and the dollar as a means of payment. The strategist elaborated, we see fundamental reasons to believe that regardless of where the price of Bitcoin goes next, cryptocurrencies are here to stay as a serious asset class. So he's saying it's displacing the dollar as a means of payment and gold as a store of value. So this is what we've been saying, like the Bitcoin is a black hole that's sucking in all these markets. It's sucking in store of value. It's sucking in means of exchange. Many of the Bitcoin debates that you see going on between early Bitcoin proponents was always like, no, we only want it to be a means of exchange. Do not let it be a store of value. Like, you can stop the market. You can stop participants in the market from using your money as anything that they want to use it as.
What's remarkable is that, many years ago, Friedrich Hayek was interviewed and said money was a technology that 100 years old, many hundreds of years old, and as long as governments controlled money, there could be no advances in money.
Yeah.
Along comes Bitcoin. It separates government from money. There's no government can touch Bitcoin. They're completely divided and divorced. And as Hayek predicted, if you gave people hard money like Bitcoin to transact without the interference of government, it would be an economic global boom, a renaissance. And he was absolutely correct.
Well, indeed, Max, because if you look at what also this Morgan Stanley strategist says in this, he in particular identifies this distrust of money printer gopher, of the governments, just again, as Max and I here on Keiser Report have been right for a decade now, whereas the cable news got it wrong over and over. Remember, all they did was ever report what the government at that time was saying. Like, remember, there used to be a narrative that it was really bad and it was just drug runners and bad guys using it. That was back in 2013, 14, 15. Like, we always identified what was the future for this whole monetary system, and now Morgan Stanley's agreeing. Sharma explained that one reason for the growth in it is growing distrust in fiat currencies, thanks to massive money printing by central banks. It's being caused by the money printing by central banks. It's not being caused by Bitcoin. It's not being caused by us. It's not being caused by people who point out this issue that is arising, the Cantillionaire effect causing unrest. causing distrust, causing anger at the injustice of some people getting free money from the Fed or the Treasury, and most others not. So it's Morgan Stanley points out, as we've been saying, it's not us pointing it out. It's the fact that the Fed and the money printing going on that's the issue at heart here. That's why we've destroyed our set so many times with Max blowing that money gun all over the place, right?
Yeah, well, look, it says right there in the Genesis block of January 3rd, 2009, Chancellor on brink of second bailout for banks. That should have been the hint that this was here to put an end to the central banks. And now here we are in 2021, and now Morgan Stanley is quoting essentially the Genesis block of Bitcoin.
And then, a lot of the mainstream media quote all these naysayers of Bitcoin who are gold bugs themselves. And here's what Morgan Stanley says, again, backing exactly what Keiser Report has told you for years. Another reason is generational, as young people view cryptocurrency as an improvement over metal coins. He continued, quote, "The worst knock on cryptocurrency as a store of value is its volatility." That's Nassim Taleb recently said that. But unflinching demand from millennials has helped lower the volatility of Bitcoin even during the pandemic.
Right. I mean, the question is, do you accept fiat money where the volatility is zero, but the loss of purchasing power is guaranteed? Or would you prefer Bitcoin, where there is volatility, but the gain in purchasing power is guaranteed? Those are your two options.
I might add, we had a personal situation with the volatility of the US dollar in that when we made a film for Al Jazeera English back in 2005, I think it was, or 6, right when they started their launch week, we made a film called The Death of the Dollar, and we were paid in dollars, our budget was. Well, between the 1 month of signing it and the 6 weeks later of delivering and then getting paid, the dollar crashed by 20%. So we lost money because our expenses were all in euros and pounds. And we were like, well, that was a dumb move to make a film called Death of the Dollar and get paid in dollars.
Yeah, it's ironic. We learned our lesson for sure. We watched that film in great detail, trying to figure out how do we end up on the short end of that deal? What was up with us?
So also, again, continuing with the millennials who we identified as they would be happy to accept Bitcoin as a store of value, much better than gold. Well, he says the strategist added that this age group believes the open source software behind Bitcoin makes it more transparent, transferable, and trustworthy than paper printed by governments. He emphasized that this crypto confidence may reach even deeper in emerging markets where distrust and centralized authorities run high. Governments have been slow to recognize this evolution. Bitcoin is also starting to make progress on its ambition to replace the dollar as a medium of exchange.